Good day, everybody. Today is April 2nd, 2025. This is Brian here from quantlabsnet.com. I just wanted to go over and recap what I've been doing all week. Uh, I've been probably going through one of the most complicated processes I've done since I started using AI. I'm going to show you what it's involving. This is using now options trading has been added into the set of bots that I've written outside of the futures, but also have added in options now. It's quite revealing what I've got. So I am going to show you that now. So let's get to it. Okay. So the first thing is in here, I've been posting as much as I can. I've been talking about it through my streams and all of that fun stuff. In here, if you go into my quant analytics, I've been talking about all this stuff in the last number of days and what I can do. So let me show you the packages I can now work with. So if you don't know, we have the ability to read the markets via news, create PDFs, and analyze what's going on in the markets from that news. Generate now, 100% no problem. Generate dynamic uh, trading bots related around the news and specifically designed now for both the futures and or options. On top of that, we have other new capabilities that sometimes using the AI that I use now is with Claude. Okay, so the first thing I've built out is the ability to generate spreadsheets. For my current provider that hosts the site, QuantLabsNet, is hosted on, cannot generate, or sorry, support Excel. So I have a PDF version of this is what I'm about to show you. So essentially we have here, again, all simulated. Now, what I'm about to show you, I really have to put these disclaimers out because this is just for educational purposes only. If you really want to get serious, always seek professional help on it from investment advisors or wherever you feel comfortable. But nonetheless, the last batch that I've been running and testing for the last few hours, as they are running here in the background, these PowerShell sessions. We have one that's unified that goes up against rhythmic data order execution. And we have the multiple different bots interfacing into that Python server essentially. So what we got here is we have 9 bots that are running, um, simulating at 372 starting capital. Because now, as I move into this live trading, I have to know what my outlay would may be needing to be in the account for live trading. Obviously, I'm not going to start with 372, but just to give you an idea what's required here. Here, what we're looking at, it's suggesting here $372,000. This has nothing to do with micros. So this is like full on contracts. Don't be scared by this. We'll never get to this point. If we do, that'd be awesome. But right now we're starting out very, very tiny, under like $2,000. But nonetheless, it's all simulated. So out of that, to do these type of bots that I'm about to show you is going to cost about estimated about $200,000 in margin requirements as part of the futures requirement with a CME and all that. Total cost of these trips will be $175 in commission. And we're looking at a sharp ratio 1.5. So if I go over to the markets right now, markets are not doing well with this Iran war. Let's face that. So you can see there's a lot of red, has been red. Last 2 days have been good. And as a result, these bots are very conservative. So if you're pulling in expected sharp ratio of 1.5 or more, you're doing pretty good. Sortino at 2.1%, average win ratio, probably realistic at 55%. Max drawdown 11.5% is pretty good because it's within that 15% um, uh, tolerance. On top of what are we looking at here? So essentially, the kind of bots that are coming out in the last batch based upon news We have here, if there's de-escalation, we have a bot for that. For oil, we have a Bitcoin near far contango, a gas one for storage risk. The gold safe haven is a momentum based overnight interest. Uh, Euro USD VIX. It's a term structure short, so I guess they're anticipating a market to calm down. And general markets, stock market's going to move up. And then we have another one on the Bund, the German bond. Now, I don't have subscriptions to certain um, instruments here, so they're not going to work. I'm very only CME related, and as a result, all the certain ones will not be running. No data is collected because I just don't have the subscription for it. So here's the exchanges. So as I said, we're looking at Eurex as an example. I don't have access to or CBOE. So as I said, some of them will be options and futures. We have multitude of long or short or long only, short only. We have here where it's portioned out on that 397 or whatever with 367 and allocated. So right now it's allocating 140,000 potentially for a $3,000 return, which is kind of high risk, low return. But this is very conservative for the different types. If it's an option, we know what kind of option structure it'll be, and the focus on it's a commodity, crypto, or whatever. Very little equities right now. If the market bombs out and starts to move up, you'll see more equities. All right. So here's some of the costs. I think these are really important to understand for each of these bots. We have here exchange fee per side, commission per side, round trip total, the contract size for each of these trades. So you can see here, Bitcoin's the most expensive at 85K or RBOB for gas at 12, so on, with the margin requirement and the total return cost. So we can assess that from portfolio management side. And again, this is 100% AI that's doing this. So that is what I've put out on each snapshot, I'm going to call it, or downloading of, of, of this stuff. So out of that, I've kind of introduced you to the portfolio, the fleet of bots, as they call it now, or fleet of agents, as they call it. It all comes out of this report that's analyzed. It's usually about 25 pages. This is all from the news. It's very detailed now, giving you what a lot of the institutions are doing. You don't want to trade in the spot market where the retail market's going to be. You want to focus in where the institutions are. Why? Because in this market, these market conditions, you want to follow what they call hot order capital flow. Wherever the hot capital order flow will go in terms of volatility, for volume, liquidity, you'll be able to capture those profit potential moves. So you can see here what they're doing. They could be in futures only. They could be in a combination of futures and options. I have a whole course on this. This is what the institutions are doing outside of what we're able to do because of it's U.S. and CME only. But this report will cover everything. In fact, there's some of the suggested ETFs that institutions will use as well as part of their arbitrage strategy correlation to other ETFs as well. So I'm able to add those down the line using interactive brokers to trade those automatically as well. So that potential is there for that if it's going to be ETF. A lot of them may be volatility related, blah 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 blah. But there's a big report generated on each download session. I've seen enough of them. They're very detailed, okay, and they're very useful. So you can see here some of the suggestions long gold, short BTC, and you know, it gives very specific based upon news. And this changes every time I download the news. I could do it as often as I want, as long as I'm willing to pay for the AI costs from it. So there's that report as well. Also, I've put in here the PDF version of that spreadsheet that I just highlighted here as well. Okay. And there's also a chart of potential forecasting as well. It's not very useful, I find, but it's there that I've generated this one right here for the trading analysis as well. Okay. So you can see that now that there are now options added in. And as I said before, when it's done right, is that you can lose huge amount of money when it comes to options, either, well, on the downside, but on the upside, there's in an unlimited way, you can do very well with options. And that's where a lot of the traders that do this well earn their keep, as they say. So part of this, from a career perspective, if you're going to do this sort of thing, as I keep saying, over time, what we'll see more of is systematic portfolio managers, and we'll eventually do away with a lot of the quant teams and truckloads because everything now can be done through Claude desktop. Okay. Um, Here you can see I'm running now Claude desktop, some of the sessions that I run. Very powerful to be able to interface it with native English. Like that's where we're at. Okay. Um, so there's all that fun stuff. Okay. So here we have our risk metrics as well. And this is important from a portfolio standpoint. If you're using a very sophisticated LLM model for AI, like Claude 4.6, and that's Opus, you can do very well. As a hint, just to generate this level of portfolio uh, in a spreadsheet, if I just use Sonnet 4.6, you'll get one tab, one worksheet within this spreadsheet. But because I'm using Claude, and the difference between Claude and Sonnet, it's going to generate me four worksheets with all this fun stuff. And that's the difference between using Claude versus Sonnet. So if you're using anything but Claude Opus 4.6, you'll know that there's a massive difference. So if you really want to do well at this and bang out really professional level, institutional level reports, spreadsheets, whatever, you can only really use the latest of Claude Opus 4.6. And apparently now that there's a new 5.0 coming out soon too, in the next maybe month. I don't know. Still waiting on DeepSeek 4. So this is a spreadsheet here. I've shown you the PDFs. So out of that, I'm going to show you, as I said, we're running the bots live, testing the markets with real live market futures and options market data. Um, so the powerful thing, I've shown this before, actually this one here, with this log analyzer, this is pretty powerful stuff. Again, this is generated by Claude Opus 4.6. Big difference. Okay. So the funny thing is, I should mention this. I have, when I did start doing my reports about a month ago, I started getting some high profile folks from the big firms, BlackRock, State Street, and the like. The last 2 days, I've been trolled by this one guy from BlackRock who used to work at BlackRock, and he's been putting the face palm on my videos, and that's the response I got. So I guess he's questioning what I'm doing. That's fine. I don't need permission from BlackRock uh, do this. Maybe it's too advanced. I don't know. But this stuff works because it's real market data. So let me load in the latest logs, and everything's all log driven, very big logs too. I just noticed every data set that I have within my VS Code, each one of these that are generated on the timestamp with the date, they're about a gig a piece from the amount of logs they generate. It's huge. Anyways, let me go back to that spreadsheet or the dashboard here. So I'm going to load in all the newest logs. Okay. So what are we doing here? We've got this, all these logs here. So I'm going to load them in. So here's what we're talking about. We have 6,000, and I've only run it for the last maybe 2 hours. So you can see here we have over 6,000 log events. That's anything data related. Everything's running clean now as well. And from what I'm seeing, um, we are moving into the markets to close out because it's Thursday, Friday. So right now, no trades have taken place as well, but everything's been running tickety boo. I'm just showing you what's in this report. There's a new options tab here, right here. So there's a few of these option bots now that include both futures and options or options only. Um, so these are some of them. And they seem to be kind of working. The connection into with either Rhythmic via WebSocket or Redis can be, I don't know, we'll use the word challenging. And also, if you're requesting so much data, Rhythmic will also throttle the response. So if I'm constantly polling, which I am, and I know I am because I've got 6,000 requests in the last few hours, Rhythmic will throttle that, just so you know. So I may have to slow that down. This is why I'm thinking, you know, zero bots now are collecting data 'cause it's just too much, especially when you add in the futures as well. So this is where it's at, all fairly new. I still have to diagnose where this is at. Um, and you can see here, it'll give you the pricing on something like Bitcoin. Um, Overall bot performance, you can see it's dipping on price, and you can see the general price be moving up. And same with this one, which could be, I don't even know which one this is, but you get the idea. Okay. So generally, this is pretty good. As I said, we have the options now. We have a signal score measured, uh, the chain contracts that it's downloading, and if there's any diagnosis it needs to fix. Now, I have to say, with the option chain data, it does connect into it. But if you're doing futures, I don't seem to have any connectivity problems if it's futures alone. But once you start adding in options, there's a lot more involved. So as I said, I'm new to trying to understand how frequent should I be polling Rhythmic before it starts throttling my account, because it's doing it, pretty well multiple times a minute. I may need to slow it down every 5 minutes or something. Here's the ranking on the bots. Okay, so some of them can do better. The FX one on the Euro USD, nothing's trading. I did see some trading last night and the prior night. So here you can see there's no win loss, but you can see a lot of the data is being reported for this Bitcoin strategy. This one I'm not even subscribed to. This one, natural gas, I don't know why, but I should be able to pick up data from that. That might be closed early because of the time in the market, and then the VX, which seems to be the wrong symbol. But um, the I might need to slow down the downloading. That's kind of what it's telling me. Maybe even down to every 10 minutes or 15 minutes or something. And you can see here. Here's the breakdown on the type of strategies. So we have here options only, futures only, blah blah blah. It's kind of sophisticated. And you see here, all the data was no problem being collected, no problem. Now it was for the CL6 now, so it's saying there's very little data being downloaded in this chart here. Again, it could be the market data. I don't know. I have to look into it. Um, and then I can export everything into a PDF. Again, this is all built out with using Claude Opus 4.6, and I think um, anything less than that, you're not going to get the sophisticated that you're seeing here as well. So there's that. Um, when I started working with uh, the Claude Code extension for VS Code with the options, I was able to, I don't know, break it, overload it, and virtually in the responses when it was doing something, it was honking out, meaning it stopped or it was not collecting anything. So because I was overwhelming it with all this stuff to collect and being able to generate this to get to this point is a hard has been a hard process. When I'm past it, it does work. But I'm going to have to, from what I'm seeing in this report, I'm going to have to slow down the requests, which is fine. I have no problem with that. And I might need to, if I want to be able to do this high level number of requests to Rhythmic, I may need to move up to the, let's say, the Diamond API. But we know that that's a big API set of requirements, including the account size. So I'm not there. So I'm still retail. And as a result, I have to probably slow down my requests for data. I've never seen this, and as I said, it's all obviously um, to do with option data. It's a lot. Anyway, so I just wanted to talk about that. Let me just go back to me. So that's where everything's at. With the options, it does work, um, but I have to slow everything down. Um, and It's very powerful. If I was to show you the code, which I can actually. So let's take a look at, usually a good one would be oil. So in here, what will happen is there's not a lot of quant stuff in there because in my prompting, I'm not asking for quant stuff. As I said before, the quant typically complicates the process. But from what I'm seeing in terms of algos, we're doing bid and ask stuff. Um, On top of that, it's the usual ATR, moving average. You can see here, just some sample code here. We've got a ruling window, um, picking on the momentum. Again, all of the Greek analysis, which is quite a bit, and it's also asking for implied volatility because, as I said, the difference between futures only and futures with options, the insight is just so different. If I was to pull up again that report, um, this one right here, you could see here what institutions are doing. Okay, even in the world of Bitcoin, I mentioned this in my last stream. If you understand this with what the big money managers are doing, and that's going to have a huge impact on the pricing and the price action of Bitcoin itself, unless you don't know, you're just kind of like guessing. Okay. But here it's telling you what they're assuming. So if you got oil, okay, what there's going to be some impact on other instruments. So here we have oil, and it's telling you exactly what institutions are doing, and it actually tells you what things like market makers are doing. Okay, they're shorting, blah blah blah, based upon price with the targeting. That's how advanced the AI is. Same thing can be said about gas. But if you're just a, uh, a Bitcoin or an Ethereum trader and you're not understanding this, you're getting killed. And there are opportunities in Bitcoin and Ethereum, but you're not going to get it in the spot market with a questionable exchange now. With in this case, they'll always mention Bybit and Binance. Okay, they have the volume, but those are retail traders from Asia that's driving that. But the core um, drivers that will impact Bitcoin are institutions. So you can see here, Bitcoin. Okay, so right now, based around some events, again, because of Trump, it impacts open interest of of Bitcoin. So because you have open interest, that's telling you to test the market of what's happening in Bitcoin on the pricing front through the options market. Okay. So here, typically, there's always, if they're out of Asia, they can do this. They could do arbitrage trading between the different exchanges of things like Binance and the CME. Very common, I'm seeing. You see here, weak demand and cash and carry arbitrage between the two exchanges. Um, there can be perpetual, and again, you can see they're using Bybit and or Binance only. Don't ask me why they're not using Coinbase. They're not using any of the other exchanges. But it's always typically Bybit and Binance. Okay. I don't see a lot of Coinbase anymore. Like, I just don't know. But you can see here it measures volatility, the skewness. We even do the Greek analysis. So here, we're looking at gamma as well. Again, that's option under the Greek analysis. And here, it's telling you what it's doing here. Okay. At the dealer level. So that's the dealers, the brokers, the hedge funds, the quant shops, the institutions, the big multi-million dollar hedge funds or institutions, what they're doing. So they're anticipating here hedging could accelerate the downside. But because you know that, and you know that potentially there's going to be a downside risk intraday level, the spot market, the retail traders aren't going to know this. And here you know why, okay? Because of exactly what I'm highlighting here. Funds being bought at 60K, put blah, 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 call overwrite, structure notes, blah, blah, blah. And they're using the order flow from the folks in Binance, Bybit, and all these retail exchanges to kind of like, I don't know, it's not manipulating Bitcoin, the price of Bitcoin, but they're able to drive the majority of the price because they have such an impact because they're buying so much volume. They'll be the first ones to impact the price of Bitcoin, just on one example. And it's the same thing when it comes to Ethereum as well. Okay. So you can see here, open interest has dropped on Solana, let's say. Okay. And then the funding rate on FTX goes negative. Okay. Very minor event, but it tells you on what's happening with these other exchanges. And this is what a lot of the hedging opportunities that come out of it. Again, you can trade Bitcoin against gold. So here's some opportunities that come out of that. And it has also impact on Treasury as well. This is what the institutions are looking at as well. And then we have the interest rate futures as well on the macro because of what the Fed will do potentially on a cut or a raise on interest rates. And again, that's why you start to see these impacts on prices of most likely Bitcoin and maybe Ethereum as well. Okay. People don't like to see that. But that's the truth on what's driving the pricing in Bitcoin. Okay. So, again, these things can have an effect on Bitcoin as well. Okay. So here, there's a risk here on where do we put our money, Bitcoin USD, or do we put it into the dollar index, US dollar index? And they measure the correlation, blah, 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 and then they price according, okay, among other major currencies. And this is how it works. And this is how you analyze this. And then you can also see the volatility here as well, the VIX and how it impacts all these um, major instruments in the futures and options space. Okay, so here we have XRP on top of that as well. Clarity Act that has an impact as well. And then it has an impact as well on USDC and USDT as well. Futures basis, again, institutional talk, right? And it goes on. And we're only on page 5 of 25 pages. I'm just showing the crypto stuff. But it's very important to know that. Okay, anyways. Yeah. So I got that also posted in my groups on the website, at quantlabsnet.com. Because I have futures now added into this pricing on this trial is going to go up. It's going to go up to at least 120 a month. Right now it's 67, but it's going to go more because of the value it's bringing, plus the suggested bots as well. So that's for the quant analytics stuff. And then if you just want to follow what I'm doing, get on my email list as well. I have Discord as well. We're adding some new people. We just broke through 300 members, which is not bad. But because we're now moving in options and futures and all of the bots I just showed you, the first session, we show you the trading plan for for those bots that I'm just showing you now. I could rerun this whole process automatically, and again, it's all agentified now, um, truly agentified. Let me just see if I can load this up. We want a better, faster editor. Let's pull up the notepad here. Really sophisticated, I must say. But here it gives you the plot plan of what was generated. Okay. Again, you can see estimated costs. Okay. Starting capital at 25K, expected return, profit horizon as well. And that will do it for every single strategy and or bot, whatever you want to call it. Okay. So it's more geared understanding from a portfolio perspective, cost, and the expected return as well. It does that for every single one as well. And I'm just trying to see anything else out of this. So, um, yeah, it's very sophisticated. So just alone on that, prices will go up. You will not see a report like this anywhere. You won't get it in news, mainstream financial news. You'll not get it in third-party services at all because they're not doing what I'm doing on the AI front. So that's why it's more and more valuable now. And as I said, let me just see as an example on the ETF front. So you can see here some of the other ETFs as examples. A lot of people don't want to move into futures and options because it's so sophisticated. But yet, a lot of these institutions are using ETF as metric as well. So I might add that piece in later on. That's for the equity via interactive brokers. You can automate that on top of it, um, so on and so forth. But it's very sophisticated what's being built out here. It covers all the currencies, treasury, commodity, equity indices in the CME, and the crypto and agricultural as well. Just to give you a tip, with everything moving now with energy, the cost of it, and the calamity it's turning into, a lot of the doom and gloom uh, old bug traders are moving into food because they anticipate the cost of food is going to move up because of the lack of fertilizers globally. As a result, futures and options and anything to do with food production is going to go up. And that's another smart way to counteract inflation. Personally, when your food costs go up, you can actually circumvent that by getting back a return via options and futures trading as well. That's one of the other things. And you could say the same thing about energy as well. If you're going to go to fill up your car with oil or sorry with gas, and the costs are going up. If you were to trade oil and or gas or natural gas, and you're getting a return from that, you're actually equalizing your cost of the gas pump because you're getting a return from the cost of gas of trading it in the futures and options market. Um, and same soon with food. That's a smart way to do it. I would think. Anyways, we'll leave it at that. Thanks for watching, and have a good day wherever you are. Bye bye.